Hey there, fellow traders. This is Austin. It's Tuesday, April 18th. It's in the evening. It's hours and hours past trading. Lots gone on between this morning when I was trading and now. Taking a look at the S&P market, and quite frankly, I'm not going to do videos constantly, and I don't blog anymore, continual updates, because to be honest, I don't feel like I have enough new things to say. I don't want to be repetitive and boring any more than I ever have been, and lose interest totally. But I will from time to time post thoughts here that I consider to be important, and I might even do some week-long, end day trading discussions, whatever. So let's discuss the trading day today and trading in general. All right. First of all, yesterday was Monday. And here was the open range, and there were absolutely no signals while I was in the market. And this is, of course, a 5-minute chart. And so I was, let's just say there was nothing. It was the open range. They popped above, and then they didn't quite hit the 233. They pulled back to the open range. Then they traded up here and went flat, and then that was just the end of the day stuff. So that was that. Very illiquid, not unusual for a Monday, and certainly not unusual for Monday after Easter. Today, similar behavior, as the computer's got it going. Here's a gap fill from yesterday. That was yesterday's close. One behavioral characteristic. This is unique to the S&P only. It comes within a couple ticks of a relevant zone, and then it'll back right away. And I think, in my opinion, and I've seen this for years and years, we've discussed this for years, whether it's a gap fill, whether it is a roadmap, whether it's a market profile level, volume studies, whatever it is, the S&P will come within a few ticks of fulfilling that and then reverse hard. Very, very common behavior. It's got to be the computer's programmed such. Anyway, here's the open range. They popped them up. They almost filled the gap. They did not come close to the 233. And then they came back down, and they took them to the open range, and they couldn't release. They got sticky there, and then they traded through. And look at that. They fulfilled the CM roadmap 233 just about to the exact tick. Remember now, I think it was a video or two ago I talked about this being a forward projecting price study, that at 9:35 Eastern, every single one of us had this attached here, and every single one of us saw all of this info, and every single one of us would have watched this fulfill hours later. Then after that, they kind of magnetized the open range and just stuck around, and not much happened. Very low volatility these days, not a lot going on. Tradable. So here was my day in the market. It was over with fairly soon. Taking it back to, let's see. Well, here we go. So there's the open on the gap down, running a 1,000 volume chart, because I find the market is so thin right now, I can't even get signals on a 2,000 volume chart or faster. It's just that quiet. So I tried an entry with 2 contracts here, and it got filled on 1. It happens. It was a pullback situation, and they just barely pulled back to, they didn't trade through it. They pulled back to it. I was looking for 2. They filled 1, and that was it. So then I, canceled that order, and I was looking for something more. This is where it filled, by the way. And so then I actually filled another contract. Now it 1.5 points higher. It went barely 2, not quite, or barely 2 points, or whatever it was. Then it came back here. Then it came back right about to the blended entry of both of them. Go full screen for a better look. And they traded, so that was the double fill, and then there was the pullback almost to the blended entry. And then they came up and they took it off for 3 points and a tick. And that was about the high of the day, or the high of that move anyway. And then they just cratered right on down. There was a sell signal or 2 here, and that was it. And that was the whole day. Illiquid as it is, it was still good for $325 on 2 contracts. Okay? And that's trading. That's the market these days. Now, let me fill you in on the current state of trading, or in the market in general. You're not going to hear this from anyone else, especially on the educational side. On the educational side, this is supposedly a big secret, so nobody knows, and everything's status quo and so on. And I'm going to tell you why. I'm disclosing this because it's the truth. But first, I got an email this weekend. Today's Tuesday. I think it was Saturday or so. And somebody was saying something to the effect of, I don't trust any educators. They can't trade. If they could trade, they would. Educating is the easy money. You just sign up hundreds of people and get rich, and so on and so forth. Okay, and that was kind of the rant. And I understand. And it was in response to a comment I made on a long-time blogger and mutual friend only through the internet. We've never met, but we've known each other for more than a decade. And this particular trader has struggled as of late, and I was trying to give him some encouraging words. Apparently, one of the followers there took that wrong and kind of lashed out at me. So here we go. The trading world in general has imploded. Okay? What used to 10, 15 years ago, it was cool, it was chic, it was popular to be a trader, everybody wanted to be. They all saw the pictures on the internet of, guys sitting around with like 16 or 20 monitors, this real hooked up, dialed in network set up, and, furiously punching keys and cashing out tens of thousands of dollars a day. The message boards were full of, I made 10 grand today, I made 12 grand, made 50 grand, made $1 million. Legitimately, people did when volatility was high and price ranges were off the hook and, everything was just great guns. But that was a lifetime ago. Not only was that a decade ago, that was a lifetime ago. Fast forward to circa 2015, 16, 17, HFTs took over. Volatility is collapsed. Liquidity is collapsed. The pit session of trading for crude oil and a number of other things is gone. There is no more open outcry. Now it's just machines and the quiet hum of computers and $100 million HFT programs designed to back chop every inch of a chart and take out every stop possible. Okay, that's the modern world. And guess what's happened? The vast majority of individual traders have tossed the towel. They've quit. They're gone. They couldn't make money, or it's not the action-packed lifestyle that they expected, so on and so forth. There is no individual trader industry anymore. There is no such thing as signing up hundreds or even dozens of people for some kind of trade advisory room operation or whatever the case may be. All of that is in the past. That's all over and done with and gone. What is left? People like us. If you're watching this video, if you're listening to me here 8 minutes and 26 seconds in, you're still interested in the market. You haven't left. Right? Everybody who's not watching this, they used to, they're gone. Here we are. What are we going to, and so what do we do about it? Well, we grind. And this is what trading has always been long term. The high volatility, the wild times, the fast money, and all the glitz and glamour. That's just an illusion. That was never the long-term trading profession, and it never will be. I don't know if we'll see those times again in our lifetime, or if we won't. I have no idea. I don't know if we're going to see markets any more volatile than they are right now. Maybe this is it forever. I mean, who knows? What I know for sure, this is trading, grinding it out day by day, and that's what we're doing. If you're doing this, congratulations. This is trading. If you're not doing this, why not? All right? I don't know why not. Tomorrow onwards, I'm going to begin I'm going back to, and I'm staying with, and that's it, the individual mentor type trading. But I'm going to do something that no other educator does and probably ever will. The mentoring I do with individuals is going to include live trading, an individual account, my own, and it's going to include rebating back the registration cost as we trade forward together. All right? So in other words, I'm going to educate and I'm going to rebate back, Lord willing, with successful results, registration fees. And I'm not going to do that with crude oil because that's untradeable. And I'm not going to do it with anything else. I'm going to do that with the S&P only. You know, the biggest mistake that I've made in my recent trading history, and I'm talking about the past 5 years, is trying to stick with illiquid, untradeable symbols too long, in particular crude oil. It just compressed and compressed and contracted and got illiquid and choppier, and I could not make headway in that thing, nor can anyone else. All right? It was a simple matter to apply the methodology that works to a symbol that's still liquid enough to trade, and quite frankly always will be. Because let me tell you, if the day ever comes when the S&P is not liquid enough for individual traders, nothing will be. Then the world of trading has ended as you know it, and there will be no more opportunity anywhere, period. Not in Forex, not in bonds, not in commodities, not in stocks, not in options, nowhere. The day the S&P becomes untradeable due to lack of liquidity is the day the trading world has ended any opportunity for people, and quite frankly, most machines. All right? So I'll be putting information on the site as far as that goes. But this is the game. Grinding every day. Couple $100 here, $300 there, $500 or $800 at times, minus 100 or 200 once in a while. That's the game. Grinding it out. Because you know what? Couple hundred here and a 300 and 300 there on different days, and before you know it, it adds up to real money. Thousands and tens of thousands and hundreds of thousands in a year. Just add contracts. It's that simple. What would the ability to grind this out be worth to you? What would the ability for you to book $325 on 2 contracts in similar fashion? Not exactly, because nobody will ever have identical results, nor will 2 days be the same. But what if on some given days you could put $325 in your bank account in an hour or a few minutes? In this case, it was like half hour or so, and maybe another day $500 or $800, maybe another day 100 or 200, and some days minus 100 or 200. And then at the end of the month, you're up, thousands or tens of thousands of dollars, depending on your actions and how many contracts you trade. What would that be worth to you? The ability to print your own money. I'd say it's a rather invaluable tactic to have. Hope this helps. Looking forward to trading with you inside, and as always, best trading wishes.